Thank you, Pascal. Thank you, everybody. Welcome to day number 4. Today is technology and innovation. And for the next 60 minutes, 1 hour, we are going to look at the use of technology in inclusive insurance and do a little exercise or a little discussion and share our thoughts as we always do, so that we continue to realize this objective of sharing experiences with what we have been doing and what we know. So briefly, we will talk about the uses of technology in inclusive insurance under some subheadings: InsurTech, RegTech, SupTech. So you can see the tech, standing or meaning representing technology. And then we will look very briefly at mobile insurance, because arguably it's about the most popular, most used technology used in insurance. And then we'll look at some opportunities and risks. These do have opportunities, but they do have some risks as well. And we'll look briefly at them, and then we'll have a discussion around those issues, and then move on or bring the session to a close. So let's start by looking at InsurTechs. And InsurTechs as defined by so you have FinTechs and you have InsurTechs. Okay, so the InsurTechs as defined by the IAIS says the variety of emerging technologies and innovative business models that have the potential to transform the insurance business. So they are technologies and innovations, mainly a combination of technologies and innovations that are used to transform the insurance business, are used to improve inclusivity, are used to make the customer journey easier, are used to do things more efficiently. So you have a few of them here. So we have digital platform, internet and smartphones, digital platforms where companies, insurance companies, financial institutions now have built digital platforms using apps and USSD codes, and customers can go there and do their own thing, onboard themselves, make their request, ask their questions, or submit their information. And that is is getting quite popular now. We also have the Internet of Things, where you have a connection or a network of devices, vehicles, buildings, and other things which sort of exchange data. So you could have a phone, a house, a device somewhere, a vehicle, and these are connected in some way, and they help to exchange data and help to make insurance business easy or more efficient. This is usually used. The Internet of Things applications in inclusive insurance could include home insurance or livestock insurance, where the animals are tagged with some devices, and these tags are able to transmit information to a certain location, and this is used to monitor what is going on, and used to control a lot of things. They could be used for underwriting, for risk management, for quite a few things. And then you have telematics, and telematics are communications between sensors, devices which transmit information on event or behavior from one location to another location. Devices or equipment that are used to transmit event, behavior, whatever happenings from one location to another location. So they are usually used in health insurance, in vehicle insurance, where user behavior is used to is transmitted to enable the insured to be able to know how users or their insureds are behaving on the road, are taking care of their health, or are taking good care of their animals. Big data analytics is just the use of big data when the data that is collected by Google, by your supermarket, by your whatever places that you give them permission to collect data on you. When you have loyalty cards in shops, they use these cards to collect data, and they come from various sources and various forms, and this data becomes a huge database, and they are analyzed to do certain things. So they are analyzed to develop things like product offerings. So based on the analysis, the results of the analysis of the big data, insurance companies are able to say develop product offerings for specific segments of the population, or they are able to manage risk selection because they get to know certain things, certain trends and certain behaviors based on the analysis of the data, and they are able to develop risk selection. They are able to do pricing based on the results from the analysis. They are also able to do cross-selling. Big data analytics also helps insurance companies to be able to do cross-selling, claims prediction, and claims management as well. Based on that, it also helps with fraud detection and also customized product offerings allowed. So big data analytics, this is something that is currently being used. Then we have comparators and robo-advisors. These are mainly places, online services that provide automated algorithm-based product comparison and advice without any human intervention. Okay, and so consumers can go there, and without the help of anybody, are able to look for what they want in terms of insurance and check out the terms and conditions, compare terms and conditions, and decide to buy. Robo advisors are also used for a whole lot of things. To onboard, customers can use to onboard themselves. They can chat with the insurance company technically and seemingly, and then we have the artificial intelligence, which is a technology which enables computer system to accomplish tasks that typically requires human intelligence and behavior. So it could answer questions, it could make analysis, it could make decisions, it could give advice based on some questions that are put to it without any human intervention. And these are all being used in insurance, and some in inclusive insurance a lot. These are used for a whole lot of processes. So marketing, they are used to do marketing, they are used to do sales, onboarding, premium payment, claims application, claims payment, claims management, claims investigation, complaint, customer service. So these applications are used to do a whole lot of things along the inclusive insurance value chain. I just want to stop here for a minute or two to see if anybody can share any practical application of any of these technologies in their jurisdiction. If there's a practical application, a specific application of any of these in their jurisdiction and how it works. If anybody wants to share some information on that. Could you just unmute or raise your hand and share some information? Yes, Velase, go ahead.
Thanks, Kofi. I think I just wanted to share, one that I have, that we actually have in South Africa is on the telematics in terms of the car. We've got a company called Discovery Insure. So they actually pay us back, for good driving. So for example, if I pay my premiums is a 1,000 Rand a month for car insurance, I'm able to get up to 25% back, on a monthly basis if I drive well, during that month. So I think that is the one that I thought, it is, impacting on me directly. So if I drive well, I know I get a portion of my premiums back.
Great. Can we get one more person to share on any of these applications in their jurisdiction?
Yeah, this is Edwin.
Yes, Edwin, go ahead.
Yeah, I'll just share the most, hopefully the most common use of InsurTech across our region. That is through use of either internet or smartphone. So we have in other cases the use of smartphone for onboarding on some insurance policy cover, for example, funeral insurance for some big businesses. Onboarding is done via smartphone in conjunction with the mobile operators. Yeah.
Okay. Great. Anybody else? So in Ghana, artificial intelligence is also being used, and especially chatbots. And we have a couple of companies, which are actually a few of them now, using artificial intelligence on WhatsApp. And so we have one of our companies setting up something called Araba. Araba is a common female name in Ghana, and is actually a chatbot sitting on WhatsApp. And if you go to the platform, that number on WhatsApp, you could chat with Araba and ask her about the product of that company and what they do and how you can onboard yourself and how you can make your claim and what you can insure. It can also ask you questions. It's mainly an artificial intelligence, a chatbot that on WhatsApp that a few companies are using now, and it's able to speak a number of languages. So that is the other side of it, and so it's gradually catching up, and people are using it a lot. Anybody else? Okay. So we will move on. So the next set of technology that we want to look at is called the RegTech, and as you can see, The previous one was InsurTech, and this is called the RegTech. The RegTech is mainly solutions used by regulated institutions to help them to comply more efficiently with regulatory requirements. So these are solutions for regulated entities, but unlike the case of InsurTechs, which are used to improve the insurance service offering, this is used to comply with regulatory requirements. So we have RegTech applications that are used for compliance, for identity management and control, and as you can tell, this will be more relevant for anti-money laundering procedures, KYC and CDD. These are used to do those and make them efficient. Transaction monitoring to make sure that market conduct requirements are being properly followed, and then regulatory reporting. Of course, there are systems that help regulated entities to get their regulatory reporting more appropriately in line and informed. I must say that the InsurTechs are more popular, and around sub-Saharan Africa is growing, but the RegTechs is quite new. It's now catching up. It's not as common as the InsurTechs, and so we may not have seen so much of it, but they are gradually coming up, and that is because as the entire financial system, financial ecosystem gets digitized, the controls, the systems are also gradually getting digitized to in response to that, to help to build the efficiency that it requires. So as a natural response, as you would see, there are supervisory solutions in response to the InsurTechs and the RegTechs. The InsurTechs are coming up, they are developing, things are getting rapidly digitized, and so regulators cannot use manual systems to effectively regulate such development. And so there are supervisory technologies that are also developing in response to these technologies. And again, they are not as common as the InsurTechs, but they are also gradually building and coming up. And as digitization progresses and advances, we are most likely to see these become more common. So some of these solutions are used to automate and streamline administrative and operational procedures, such as licensing, license processing and processing of applications, products analysis, data analysis. These are used to do some of those routine things, and there are some that can be used to input data applications. There are some that can be used to pull data directly from the operations of insurance companies. There are some solutions that could give real-time data access to regulators, and then there are intelligence applications, which I know a few solutions around or across the sub-Saharan Africa region has. And so SupTechs are technology-based solutions that help supervisors to cope with the challenges they face, including those heightened by the use of InsurTechs in response to the InsurTechs. And even though they are also not as common as InsurTechs, they are gradually developing, and they would soon become very popular. Mobile insurance, because apparently the mobile phone is the most popular technology that is used in insurance, I thought that I should touch briefly on it. So the mobile phone has helped, especially here in Ghana, and I know in a number of sub-Saharan African countries. I know that the mobile phone has been used to reach a great proportion of consumers, people who would have been extremely difficult to reach out to at the kind of efficiency with which they are being reached. So most of you know a lot about how the mobile phone insurance works. And so I will not go much deeper into that. And we will talk about the risks and the risk management around it briefly. And that is the most important things that you have to take note of. But one thing that I also want to mention is that the mobile insurance is evolving. It's evolving very, very quickly. And even here in Ghana, the business models, the mobile insurance models have evolved and changed significantly from what it started from. When mobile insurance started here in Ghana, it was mainly a tripartite agreement, a three-party agreement between an insurance company, a mobile network operator, and a technical service provider. It usually starts with a mobile network operator becoming a master policy holder for its customers who use the network operators lines to make calls. It has evolved to the stage where this is a mainly paid insurance service between insurers and the customers, and they are only using the mobile network operators platform for payment and transactions. Yes, the mobile network operators are now mainly transaction platforms, and they are usually not typically involved in the arrangement as it was from the beginning. This is also changing the risk dynamics, and it is important, especially for the countries that developed mobile insurance regulations at the onset, to begin to review what they did from the beginning and to begin to take note of the emerging risks and the risks that are no longer relevant, so that they can update the risk management to continue to protect the consumers. Now let's use a few minutes and look at the opportunities and the risks that technology bring. Technology is good. That is what is happening. Everything, our entire life are getting digitized. The question at the beginning was interesting. Everything around us is getting digitized now, and it has its good sides, but it brings along risks as well. So let's look at, these are the opportunities of technology for the insurers. So more efficient service delivery lowers costs, of course, when a lot of the things get automated. It minimizes errors and lowers costs as well. Better delivery attract and retain customers. Risk mitigation support to clients reduces claims costs. So as I said, for example, the tagged cattle, the insurance companies or some party on its behalf is able to monitor the behavior and what is happening to the animals, and are able to prevent certain things from happening, so that they don't result in cost in the first place. The telematics, as Balase told us, monitors the behavior of the driver, naturally rewards good behavior. So everybody will be motivated to develop good driving behavior, and this, all things being equal, will result in lower claims costs for the insurance company. Better risk information allows better risk selection, pricing, and risk management. As I mentioned, there is so much information And so insurance companies are able to do a better risk selection. Of course, with telematics, with Internet of Things, these things combined, it makes it possible for insurance companies to decide what kind of risks they want to insure and actually to reduce the risks attached to these things, and to do their pricing appropriately based on the risks that they see. Back office efficiency gains can flow straight to the bottom line, of course, with the efficiency and cost. There are gains that can flow into the bottom line. Fraud can be detected and reduced. For example, when you have the Internet of Things, whatever is happening to your house or the insured gadget is being monitored, can be seen, and so the moral hazard is reduced. In the case of the insured livestock, the cattle is being monitored and they can tell whatever has happened to the cattle. So fraud is minimized, moral hazard is reduced, and then a smarter business becomes more competitive, more business, the business case is improved, and it makes more sense, it makes more profitable and more attractive invest in. So these are some opportunities. These are not all, so it's not an exhaustive list. These are some opportunities that technology brings to the insurance companies. Now, for the consumers, what does technology bring? Easier to get insurance you need at the right time because of the okay, sorry, I had a hitch with my internet. I hope all of you can hear me.
We can hear you, Kofi.
Okay, right. So it's easier for consumers to get what they need at the right time. Products are more customized. So talking about the big data analytics, you saw that it made it possible for insurance companies to personalize product offerings. And then because of better information on risks and events, it's possible for insurance companies to customize products to the exact needs of those that they are insuring. And then for the consumers, they don't have to pay for what they don't need. Easier to make payment, submit claims, and get customer service issues handled. Of course, now payment can be made. In sub-Saharan Africa, mobile money is now very common. Almost everybody has a mobile wallet account, and it's very easy for them to make payments and submit their claims, get customer service, because all you need to do is probably go and talk to a chatbot, or to go to your Momo wallet and make the payment and pay your premium, or go to some internet platform and submit your claim, fill your claim form, and just press send. So it makes the customer's life easy. More cost-effective delivery, lowest cost. So all things being equal, this should result in lower premium. For Belase mentioned, rewards for lower risk behavior, lowest cost.
Kofi, can you hear us?
Good behavior because this consumer motive. Yes, is there a question?
Yes, sorry, no, your connection's slightly breaking up. So I think we missed a few of the last bits in particular.
Okay. So I was talking about cost-effective delivery lowers costs, and then rewards for lower risk behavior lowers costs. And I was making reference to Valasa's issue or answer about the telematics, saying that when you put up a good driving behavior, you get a discount on your vehicle premium. Exactly so. When cattle are attacked and the farmers take good care of the cattle and at the right conditions, they get a discount on the premiums that they pay because they can prove that they are reducing risk for the insurance company. And of course, the value added or the value added services that they can get. So technology and innovation also brings tremendous opportunities, advantages to consumers as well. As I said, the technology is good. It's the best thing. It's actually helping to generate a lot of growth and development, but it also has its downside, a risk that comes along with it. And here, just some risk issues that we should be interested in as supervisors and begin to develop controls around this to protect the consumers. So lack of awareness that marketing is taking place, especially when you chat to these chatbots and get calls from call centers, and it becomes difficult to know that something is directly being marketed to you. Confusion of neutral and promotional information. So sometimes some neutral information is put out there to educate consumers on certain things, but sometimes it becomes difficult to distinguish between this neutral educational information and direct promotional information to induce customers to buy. And then some exploitation in terms of vulnerability and add-on selling of unnecessary coverage. Sometimes because it's all done online, there may be the edge to push things that customers don't really need. Risk of misunderstanding, especially when you are chatting with a robot. It may not be everything that you will understand. A robot is not the same as a human being, even though it's designed to chat like a human being. And so it is not all the questions, all the details that it will clearly understand and give you all the information that you want. And when there is an incorrect algorithm, it will give bad advice, and then that will also affect. Sometimes on the robo comparators, there's non-disclosed conflict of interest, so that not everything is disclosed, and sometimes that is important for the consumers to know what they are getting into and what the whoever put up the platform stands to gain from you doing business. Sometimes the information that is put across for comparison is not very accurate, it's not very complete. Sometimes not everything that is there, and so it becomes difficult to make a good comparison and make the right decisions. The decision is based on the information, and sometimes it's not as accurate as. And of course, the digital disclosure continues to be a challenge, because you want to strike a balance between cost and transparency. Okay, and so the other bit is that even though a lot of people have phones now, it's not every phone that is a smartphone. So it becomes a bit difficult to deal with disclosures and how they should be made and where they should be made. And on the other hand, you want to minimize the issue of paper to reduce administrative and overhead costs. So these are still there. There are other risks, especially for insurance companies. So there are prudential risks as well as to the viability of products, profitability of product, because the technical service providers and intermediaries seems to get heavy chunks of the premiums involved in these technology-based insurance. And so there are some prudential issues for insurance companies as well. And of course, there is the issue of cyber security. As we get more and more digitized, we need to be conscious of cyber security issues and begin to protect both the insurance company and the consumers. So these are some risks that as regulators we also have to take into consideration, especially as we make our effort to respond to or to supervise these technologies and to protect consumers. A couple of minutes for any questions before we break into our groups for the discussions. If there are any questions just before we break out into our groups. So there's a case study that we are going to. It's based on the mobile. It's based on mobile insurance, and there are going to be 3 groups: Group 1, Group 2, Group 3. And so Group 1, you will handle questions 1 and 2. So you've been given the cases. Group 1, you will handle questions 1 and 2. Group 2, you will handle question 3. And Group 3, you will handle question 4. And let's, if there aren't any questions at this stage, maybe I would ask Pascal to open the breakout room so we can go and do some discussion and come back and share our thoughts.